Now we turn to the economy. It was another brutal week on Wall Street. Yesterday, the Dow lost 172 points. That came after a more than 400-point drop on Thursday. And to put it into context, since July 21st, the Dow is now down 15%. Global stocks around the world are falling on fears of a possible recession and Europe's debt problems. So how long will this stunning volatility continue? Joining us to discuss that subject is Wall Street Journal markets columnist Kelly Evans. Great to have you with us, Kelly.
Hi, great to be here.
And that's the question on everyone's mind. When does the volatility stop and what stabilizes things?
I wish I had an answer, but the market seems as volatile as the weather these days. And I think people have really learned that we can't just rely on a rising stock market the way that we would like. Certainly when people are looking at their 401ks, thinking about retirement, there's huge uncertainty clouding that right now. And, that's understandable, but, we can't get used to the idea that there will always have a period of where the market's doing well. And I think you have to understand sort of what's driving the economy right now. And it's not a soft patch. It's not temporary factors. It's not Japan. It's really the problem is that we're still working through some of the problems that we've had building up even to the 2008 financial crisis. And so we're looking at lower growth potential. We have demographic reasons why the economy is just not growing as strongly as it once was. And most important, we still have this deleveraging process, this debt shedding process. It's started to happen on the private side, but now the public sector has a huge debt burden. And so there's only a couple of ways to get out of this, and rapid economic growth is one, and unfortunately, we're just not seeing that right now.
Yeah, and it's hard to grow rapidly when you also have this burden of debt hanging over you like so many governments do. A lot of Americans looked at their retirement accounts this week, and we took a look at three of the biggest mutual funds out there that let people invest in stocks. They were down since the beginning of this month between 12 and 13%. What do people do with their money right now? That is the question on so many people's mind because retirement savings, they've just watched them plummet.
Yeah, there's a behavioral psychologist, Dan Ariely, who said back during the 2008 financial crisis and the panic then, he would purposely lock himself out of his retirement account so that he couldn't check that because it's so difficult when you see those losses not to just panic and sell and get out of the market. And there are always opportunities to be made. You hear a lot of strategists on Wall Street talking about looking for value in some of the big, stable, blue chip companies that pay a dividend yield that at this point, given what's happened in the markets, is above what you can get in safe haven U.S. Treasuries, but they're still considered a relatively safe place to be. So, it's hard to sort of fight that panic mentality. And I will say one of the things that's been so striking lately is how much retail investors, institutional investors have really flocked to cash. That doesn't help growth prospects. So that's sort of the unfortunate kind of downward spiral you can get in is where people move to cash that undercuts growth prospects further and it kind of makes things worse. And that's one of the problems that we're facing right now.
At the heart of this risk aversion is a consumer whose confidence is eroding. What even brings that back?
It's hard to tell. I mean, you can understand why people's confidence is so weak. Unemployment is very high, and there's no real prospect it's going to come down quickly. There's a crisis of confidence in leadership. People don't look to policymakers and whether it's the Federal Reserve or the government right now and say there's something that they can do to really come in and save us and turn things around. And so I don't think the campaign season is really going to foster suddenly some renewed confidence in that leadership. And so it's really going to take, I think, stronger growth prospects. Maybe we can get some of that coming again from other places worldwide. But we've seen economists cutting back their forecasts, catching up, I think, to what the market has been telling us. And it may just be a period where people realize that it is going to be a long slog. But that doesn't mean there aren't opportunities to be made.
Kelly Evans, as always, we appreciate it. Thanks so much. Great insight.